Welcome to The Explainer. We're taking complex financial data, articles, and research and turning them into clear, actionable visual insights. Today, we are unpacking exactly how you can diversify your portfolio beyond domestic markets. And we're looking directly at the data from top financial platforms to show you how it's done. So here is the big question to kick things off. Why limit yourself to just India? Look, the Indian economic growth story is undeniably fantastic, right? But the global market offers these incredible, unique opportunities that a purely domestic investor is just entirely missing out on. If you're only looking locally, you are literally ignoring a massive chunk of global innovation and wealth creation. Going global opens the door for you to actually own a piece of the pie. We're talking massive US tech giants, huge European multinationals, and emerging market leaders. These are huge, structural, global sector leaders that you simply cannot trade on Indian exchanges. Here is our roadmap for today. We'll cover 1. Beyond India, 2. How global investing works, 3. Spotlight on the Kotak Innovation Fund, 4. Case study of Asian equities, 5. The risks and rewards, and 6. Is this for you? Section 1. Beyond India, expanding your horizons. Now, what are we actually talking about here? The crucial thing to know is that global mutual funds allow you to legally and easily get in on international economic growth, all while staying perfectly compliant with CBI and RBI regulations. There is no need to open some complicated foreign brokerage account because Indian mutual fund houses handle the cross-border logistics for you, right within the permitted limits. Section 2. How global investing works. The mechanics under the hood. So, there is a really interesting dual nature to global returns. Since the underlying assets are priced in foreign currencies, think US or Taiwanese dollars, your final return in rupees is driven by two things: the stock's actual performance and exchange rate movements. Essentially, if the rupee depreciates against the dollar, your returns actually get a little boost, and vice versa. Section 3. Spotlight on the Kotak Innovation Fund. Global exposure made accessible. Let's look at a specific example, the Kotak Global Innovation Fund. This is categorized and structured as an equity fund of funds. That simply means it pools investor money to invest in other overseas funds that are laser-focused on innovative, forward-thinking companies. It gives you highly targeted thematic exposure to global innovation. And honestly, the barrier to entry here is basically zero. For just 100 rupees, which is literally less than you'd pay for a decent cup of coffee, you can make a lump sum investment or set up a monthly SIP to start investing globally. When we look at the data across different reporting platforms, we see a really dynamic range for this fund's metrics. For instance, assets under management sit somewhere between 523 crores and 825 crores, depending on the snapshot. And the one-year returns, they're captured ranging from 16.6% all the way up to a massive 41.82%. It really gives you a sense of its size and the high growth potential it's shown over the past year. Section 4. Case study on Asian equities, Franklin Asian Equity Fund. Now, instead of a specific global innovation theme like Kotak, the Franklin Fund targets a broader area, specifically the fastest-growing economic region in the world, Asia excluding Japan. The core thesis here hinges on structural drivers like accelerating digitalization, rising consumption, and the simple fact that China alone makes up nearly 30% of all global manufacturing output. When you invest here, you aren't just buying a vague Asia label. You are heavily allocated into massive growth engines. We've got China at over 36%, India at 19%, plus serious allocations in South Korea and Taiwan. You're actually buying shares in the companies building the physical infrastructure of our modern digital world. We're talking nearly a 9% weight in TSMC, over 7% in Samsung, plus major stakes in heavyweights like SK Hynix, Tencent, and Alibaba. And the fund's manager actively allocates capital across different sectors compared to the standard MSCI Asia index. This isn't a passive set-it-and-forget-it index fund. The managers are actively placing specific bets on exactly where they see future growth within the region. We can see a huge bias toward the future here. Technology is eating up over 30% of the portfolio, fueled by all that global AI infrastructure spending. Right behind that, we have consumer cyclical businesses at roughly 23%, which are perfectly positioned to capitalize on rising middle-class disposable incomes across major Asian cities. So as an investor, you have a distinct choice. You can capture the broader structural growth of an entire continent with a regional find like Franklin, or you can surgically target high-growth global themes with something like the Kodak Innovation Fund. Both serve very different but valuable purposes in a well-rounded portfolio. Section 5. The risks and rewards, navigating the data. Hey, remember those differing AUM and return numbers we saw for the Kotak fund between platforms earlier? That is actually a perfect teaching moment. It shows exactly how rapidly these dynamic international markets shift. Different timeframes, exchange rates, and geopolitical news can cause these numbers to swing wildly. The bottom line is that offshore investing definitely comes with its own unique layer of volatility. Section 6. Is this for you? Let's talk portfolio fit. These funds are absolutely ideal if you're actively looking to diversify away from purely Indian equities. But you've got to specifically want that exposure to international tech and industry. And crucially, you have to be totally comfortable riding out the inevitable bumps of currency fluctuations and foreign market volatility. The data also strongly emphasizes a necessary timeline. Because of geopolitical shifts, regulatory risks in places like China, and those currency impacts we talked about, you absolutely need an investment horizon of at least 5 years or more. This is about long-term capital appreciation, not short-term day trading. But look, given that the traditional barriers to entry have been completely shattered by accessible options like the Kotak Global Innovation Fund, letting you start for literally just 100 rupees, the only question left to ask yourself is this: are you ready to take your portfolio global?